What the heck is happening with the Calgary real estate market? Are we still in a red hot seller's market? Are things balancing out? Are prices still going up? My name is Ryan Gillard, a real broker, your Calgary realtor. And in this video, I'll let you know my thoughts on what is happening with the Calgary real estate market. And first things first, if you are watching this video and you could use some help buying, selling, or relocating and would like some help interpreting what is happening in your area or your situation, feel free to reach out, call, text, email, or comment. I will get it and get back to you. And I also have some free resources for you, a buyer's guide, a seller's guide, and a relocation guide, all free in the written description or in the pinned comment. Let's get into it. All right, let's take a look into the stats here. Now, to summarize this giant paragraph here, I would say in September of 2024, home sales in Calgary, they fell about 17% compared to last year's record highs. I mean, that sounds like a lot, but we still had 2,003 sold units, which is still 16% higher than typical September levels. So, things are down, but obviously we're still higher than long-term averages, which is good. There is an increase in new listings, especially for higher priced homes, which did help improve inventory, but lower priced homes remain in short supply in Calgary. That market is still very tough if you're a buyer, which is limiting overall sales growth, which means if we had more homes that were more affordable, we'd have a lot more sales in layman's terms. Despite this, demand remains strong, and with improved supply and lower lending rates, the market is shifting towards more of a balanced market. So the market's still good, but we are balancing out, if I can summarize this giant paragraph here. So now I'll just elaborate on these bullet points here. So I already mentioned sales. Sure, it's down 17.6%, but we're still way ahead of long-term averages. Not that concerning. What does concern me a bit is the number of new listings coming to the market. Now, this blurb here mentioned that most of the supply growth is in the higher priced markets. How that will play out is that people only make so much money. Not everyone is loaded and can afford these higher priced homes. The more higher priced listings that come to the market, that just means there's going to be more competition, and those sellers will have to adjust their prices, which might push them down into more affordable levels, and then you might see sales pick up. So we're just going to see more competition. When sellers are truly motivated, they'll have to either reduce their prices or they'll expire off the MLS system, or they'll sell. But if there's a lot of competition, a lot of sellers will have to become more realistic with their prices. So eventually, this takes a long time to play out. If we keep having this amount of new listings in the higher priced markets, the prices will have to come down into more affordable levels for more people. That's my take on it. This number, new listings, 3,687, is actually the highest number of a September month for new listings since 2008. So the trend definitely is we're seeing more inventory come to the market, which will either balance the market at some point or push us into a buyer's market. So who knows? It's still a long ways away. We are still technically in a seller's market, but this is quite alarming. The current inventory, so new listings, this is just the amount of new listings that came to the market in 1 month. Some of them sell, some of them are still in the market, which adds to the current inventory. So the amount of homes that are currently on the market is 5,064. That number is up 50% over last year. So that's an alarming number. And what's even more alarming is the months of supply, the number of months that it would take to sell the remaining inventory if no one could list a property. So 2.53 months is still a seller's market, but this number is up 81.6% year over year. If I'm a seller and I'm thinking of getting it done in the near future, this number is concerning to me, and I would pull the trigger on selling it a month or two ago. If I was only concerned about cashing out and dumping that property, I would do it now, because this number is likely to keep going up just by going off the stats here. That's huge, up 81%. I can't believe that number. In terms of pricing, the total residential price is the average of all these different sectors, is $596,900. Now, this is starting to level off as well. It's still up 5.5% year over year, but it's actually a bit less compared to last month. And with this amount of inventory coming to the market, this number should start leveling off, in my opinion. Detached prices, $757,100, up 8.8% year over year. Duplexes, $678,400, up 9.5%. And townhouses 459,200, up 10.2%, and the apartment sector 345,000, up 13.9% year over year. So these numbers do look a bit smaller. If I went back maybe to like the start of the year or the spring market, I think some of these sectors were up like 20% year over year. So I do think our prices are starting to level off a little bit. Now let's look regionally around the city. And the city center is 603,100, up 2.3%. The west side, the most expensive area, 723,700, up 6.6%. Northwest Calgary, 646,800, up 6.3%. The north, the south, and the southeast are kind of around the average price ranges, 590 in the south, 582 in the southeast, and 570 in the north. And the east side of the city, northeast, 526,800, and east jurisdiction, 437, up 13% year over year. Yeah, and again, I'd have to look back at previous months, but I think there were a few months where the year over year for the east was like 25% increase, maybe 30% if I remember correctly. So the numbers are starting to level off a little bit. And here's a snapshot showing this September to last September. So total sales 2003 versus 2,430. New listings are up 3,680. Sorry, they're up 15.5% to 3,687. Last year was only 3,191. You can see the inventory increased 3,300 roughly to just over 5,000, up 50%. Months of supply 1.39 last year to 2.53, up 81%. Sales to new listings. So there are less sales compared to more listings coming on the market. Was 76%, now it's 54%. Sales to list price. So this is the number that you can expect as the sales price compared to your list price. So last year, this time, the buyer had to offer 100% of list price. Actually slightly over 100.54, and now it's 99.14%. If you're curious, though, the worst markets that I've seen were like 2016, 2017, and this sales to list price ratio went as low as 96%, which doesn't sound like that much, but Calgary, the sales to list price ratio is pretty tight normally. You don't see a lot of crazy lowball offers, but it is declining. Days on the markets should be going up. The more inventory there is, the more options there are, the less pressure on the buyer, and they can take more time. So it was 25 days last year, now it's 28 days, up 9.53%. The benchmark price, we had a crazy year. From January until maybe about a month or two back, it was a fantastic year. Things are starting to level off. So all of the prices, they're still up. It'll take some time for these to level off. But the benchmark price, 596,900, up 5.53% over last year. And let's check out this graph right here, months of supply and price changes. So you can see the blue is the months of supply. When COVID started, we had a lot of inventory. We were in a bit of a recession, and you can see it slowly drop with COVID. For whatever reason, COVID, it just really transformed our markets, and we've been dropping every year since. But now you can kind of see it. It's pushing up now. So the trend seems to be, the trend is the green line going down, down, down every year. And now it's starting to tick up. So what does this mean if you're a buyer? So I would say there are more homes coming onto the market, especially in the higher price ranges. This means the buyer has more options than they did earlier this year. It might be a little easier for them. In the future, I think going forward, we'll have balanced market conditions. I think we're shifting away from the extreme seller's market earlier this year that we had. There's just less pressure for the buyer to act quickly or pay above the asking price. I think the buyers are still having challenges with just the price of homes. There's not that many that are affordable these days, it seems like. But with the lending rates coming down and the upcoming 30-year mortgage option for first-time home buyers, I think that happens December 15th, if I recall correctly. That might help with affordability and could help you out. Now, one thing to mention for buyers and sellers is that there are some recent changes with mortgages coming up this December. I think it's December 15th, where the insurance cap is going from $1 million to $1.5 million. This will affect the Toronto and the Vancouver markets, the more expensive markets, more so than Calgary, but it will help the luxury market in Calgary, I think. And I got this example where if it was a $1.2 million property, you'd have to have like $240,000 down to get into the property. And with this change, I think it reduced it to 95,000. So this could definitely help out the luxury market in Calgary. It could help sellers and buyers. It just makes things easier for both of them. If there's more buyers that can qualify for those properties, I think that should help. I don't think it'll do much for like the affordable properties in Calgary, but one thing that can help is that in December, first-time home buyers can also qualify for 30-year mortgages, which can help with affordability. So I think those two things can help spur on the market for the first quarter of 2025. If I'm a buyer, I would prefer to get into the market before these changes happen, because the market could take off and they might lower the rates even further. It's hard to time things like this. So if I'm a buyer, I'd get into it right now. And last up, let's talk about sellers. So right now, I would say in the lower price ranges or the average price ranges, things are still favoring the seller. So if you've got something like that, it's definitely in your favor. So overall, the market is becoming more balanced, but it still favors the sellers in the lower priced ranges, while higher priced homes might require a more competitive approach. One thing that I'll be watching for is that if there's a lot of competition in the higher price ranges, the truly motivated sellers will adjust their prices, and this could push homes into more affordable levels. So if you have something that's maybe above average or priced in the higher range, you might want to keep an eye on the inventory levels and look at homes that are similar to yours and what they're selling for, because the prices are always set by the recent sales, which are similar to what you have. But overall, the trend looks like there's just more inventory coming to the market, and I think over time this will translate into more inventory in the lower and the average price ranges as well. It just takes a lot of time. But who knows, maybe the changes come December spur on the markets and the prices go up again. So it's like the stock market, you can't really predict what will happen. That's my take on it. All right, there you have it. That's my market update. And again, if you are watching this and you could use some help, feel free to download those free resources, Buyer's Guide, Seller's Guide, or Relocation Guide, and give me a call or text if you have any questions at all. See you on the next video.